Hello, everyone. This is askSlim Live. Today is March 7th, 2025. We're doing a special trade planning session here with the askSlim analysts. We have myself, Matt, Arvi, and Katie. We're excited to have everybody here today. This is going to become a regular recurring event that we're going to host, likely on a monthly basis. So we're excited to be able to come together here as a team and have these trade planning events live with you. This will be a recorded event as well. So speaking of the upcoming schedule, let's take a look at the calendar here. So today, obviously, we're doing our trade planning live event with myself, Arvi, and Katie. And then next week, we'll have Slim's recorded Market Week show. And then on the 21st, Friday the 21st, there will be no market show or live event. And then on the 28th, we'll be back with a Market Week live event. Even when we don't have a Market Week show or live event, I want all of you in the audience to know, especially our premium members, that our team does provide regular and ongoing and everyday technical insights on the stock market indexes across multiple askSlim services. Plus, you can engage with us three on Discord, where we'll answer member questions. So there's always information regarding the markets on a daily basis. All right, let's kick this off. Here's our disclaimer slide. All the information that we're going to share is for informational, educational purposes only and should not be construed as investment or trading advice. So make sure to consult your own professionals before making any investment or trading decisions, or if you are your own professional and make your self-directed decisions, make sure to take responsibility for those. Again, we do not provide any trading or investment advice. Our hosts, we have myself, Matt, we have Arvi, and we have Katie. We're all part of the askSlim analyst team. Combined, we probably have more than 40 or almost 50 years of technical analysis experience, probably putting us at almost 40,000 hours under our belt when it comes to technical analysis. We are all proteges of Slims. We have a expert level proficiency in the askSlim methodology that Slim started over 6 decades ago, and we're happy to bring that to you today and all the time. All right, our agenda. So we're going to go through a member Q&A. So we'll kick that off. That's going to be a deep dive into the askSlim methodology. So the team, Matt, Arvi, and Katie, we're going to discuss and demonstrate how to apply cycle analysis, momentum studies, the fib swing high, swing low techniques to produce the fundamental technical evidence needed for trade planning purposes. So we typically have members that request symbols. We have a number of those that have already come in, and we'll do our best to take a few more from the audience if we have some time. And then we're going to go through, I'm going to briefly review the current Market Week special. We have a level 2 offer that actually ends this Sunday. So I'll just give a quick review of that. Arvi is going to give us an update on the stock market. And then we'll talk about something new, which is an askSlim advisory group. So we'll come back to that here shortly. And then the final segment will be translating technical analysis into option strategy selection. So Katie's going to demonstrate how to leverage technical insights when selecting option strategies. So we've got a full show here, really excited to bring you a lot of excellent information, and we hope that there's an interactive dialogue. So if you do have questions or comments, feel free to put those into the chat. If you're out there on YouTube, we welcome you as well. You can write to us directly at Matt at askSlim, or Arvi at askSlim, or Katie at askSlim if you have any questions after the show concludes. All right, so we're going to kick off with our level 1 to 4 member chart requests and questions. This is our trade planning review segment. And let's see who we're going to kick it off with here. Katie or Arvi, go ahead if you have a symbol that you...
Sure. Yeah, sure, Matt. Thank you. Yeah, let's. I'll go ahead and start, and then I'll hand this off to you.
Sounds good.
Katie. Yeah. Let's pop this over here, share my screen.
Right.
Okay, so you should see just a chart of CL, which is not what we're going to be actually looking at, but that's just want to make sure we have that up. So first one we're going to actually see is the XLF. I think this is a really important chart for what's going on in the overall market right now. We are seeing overall, I would say, clear weakness occurring in the market as we're seeing an overall threat that is unknown, right? We don't know how long we are going to actually slow. And we're seeing it show up here in the XLF. XLF is having a sell-off on the intermediate term down to the 78.6 fib very early in that rising phase. That is a real issue here. And it says if we lose that level, which is right around 48.29, we have likely now seen the high for that overall cycle with a trough that's only due 616 right around 84. So um, what we will be watching for is a move back to the upside that actually fails here and then rolls back down. And I would say there are very high odds of moving through this low here at around, you can see right there, and see it easily move through that level, I would say, So I would say a move like this seems like a higher odds play. Apologies, that arrow's a little bit funky. Like this looks like a higher odds play. So I'm going to be looking for a move up, but that move up has very high odds of actually failing on the downside. On the short term, there's a low that's due right about now, but the overall bias is down. So we will be watching for a low to form shortly, and then for that pop to then get sold again on the downside. You can see that next trough is due. Look at that, right around mid-May, which is when we're looking for a low to form in the overall stock market. Let's pop over to the XLEs. XLEs are also in a bearish overall mode here. Trough is 255 around 630. This old trough is right around $83. Gonna be looking for a sell-off down to that level. This is not a good chart here on the intermediate term. In terms of the short term, 313 to right around 327 is when that low is due. I'm looking for this to fail right around this zone here, 87.50 around 89.58, and a sell-off down to 83.5 to 82.75 into that trough. Okay, so if we pop over now to the 2 hour, you can see what's going on the 2 hour. Everything down. So that is saying right now the highest odds would be that this would fail here and roll back down shortly on the 2 hour as well. Okay, so let's look there at XLE. Pop over to a couple others. GDX was another one that was of interest. GDX has really been acting beautifully on the upside on the intermediate term. We have a 78.6 around 41.87. Trough that's due here around 512 to 721. So we'll be looking for just a bit higher here, then watch for this to get a curl back down. And then once this low forms, another move that likely moves through this old high at 44.22. Pop over to the short term. This one formed right on time. You can see right there. We turned up. We have a 78.6 fib at 41.74. And what we're looking for is to watch closely on the downside these two areas right here, being the 61.8 and the 78.6. If we lose those levels here, we would then be looking at a move like that back on the downside with our next trough due in the early part of April. I have a couple more here. Going to look at CEG. CEG has formed a super clear high now right there. We have now sold off. We have a low that's due 414 right on 6.9 and a 78.6 at 197.63. This old trough is at 190. I'm sorry, 155.60. So we'll be looking for a move down here, and the overall bias is clearly firmly pointed down. Pop over to the short term. 224 to right around 312 is when that low is due. 211 to 177.5 is when are our levels here on the downside, but the overall bias is still firmly down here in CEG and even on the 2 hour. Look at the bear signals coming out here in each of these areas, each of which led to some clean follow through. You can see a series of lower highs, lower lows, right on the downside, very, very clear in the 2 hour time frame in what has been just a huge move lower. And finally, I will look at TMO. Okay, this is an interesting one to me. I am looking for a move back up, but that move up is likely to make a lower high and then curl back down again into that trough, which is due 421 to right around 623. What are our levels on the upside? We will go ahead and draw those in for you. 549 to right on 561 is what I am going to be seeing here as a higher odds play to the upside, and then look for that to curl back down again, as I said. If we hop over now to the short term trough is due right about now. but no obvious trough as of yet. We're going to be watching for this to curl its way back to the upside here and give you that sign that this is trying to form its low, just like what happened here. You can see that right there, how we formed that low, then had that move through that line right there to actually trigger that rally. So that's, this needs to do a little bit of a move like that to form um, that clear low, and then look for it to rally up to the upside into that 550 to 560-ish area. Okay, so that's look there in TMO on the daily. Pop over to the 2 hour. And really not seeing a whole lot here as of yet. So just really holding sideways, and as I said, needs a bit more work. And I'm going to go ahead and hand this off to you now, Katie.
Okay. Let me know when you can see my screen.
We can, yep.
All right, so this is a Zeekr Intelligent Technology. I have a note in here. I was working on this yesterday. The cycles are still being established. These bars right here are the sum total of all of the data that we have, since it's a relatively new symbol. But these cycles, if they are correct, are 14 bars in length. That's relatively short. So what we usually end up seeing is that these end up being like minor half cycles. But we still have a trough that did form here and a move up. You can see that the reversal scout has turned green, and we are backing off from these prior cycle peaks. So we have to see whether we can get through that area. If we can, then the next level up would be the 100% extension at 35.5. We have a timing window that's coming out in that May timeframe, May 12th to June 20th. If we switch over to the daily chart, you can see that this cycle that we're in has formed a higher high compared to that cycle and getting back up towards this prior cycle peak from a couple of cycles ago. And we will have to see if we can get up that way. And I would expect this to curl down into the timing window, which runs from 325 to 42. And then the next cycle, if it's going to be able to take out that high, that would be the time for it to do that, because the subsequent cycle will be the one where we will get this trough. Excuse me, we will get this synced intermediate and daily cycle trough. But overall, this is holding up very well despite all the market weakness. And the other symbol that I have is Regeneron Pharmaceuticals. This one, we have a intermediate cycle trough that likely formed several weeks ago here, and that was right on time in this timing window that was from January 13th to February 21st. This had quite a sell-off. So the resistance zone is very high up here. If it's going to be able to make it back up there, which the bottom of which is 859.43, then it will probably be late in the cycle. We do have an upturn with momentum though, and this category in general has been doing well. Over on the daily chart, you can see that was that intermediate synced trough with the short-term trough. And then we formed a basing cycle here, ending higher than where it began after a series of negatively configured cycles, each of them ending lower. So we are going to project up to the $743.28, which is the high from back here, up to $769.50. That's the short-term 100% extension level. And this cycle isn't due to trough until the beginning of April. So overall, this looks quite well too. We've had an improvement in momentum with the reversal scout turning green, and the slim ribbon has improved to neutral. And those are the two symbols that I have, Matt. I'll turn it back over to you.
All right, excellent. Great work, team. Looked really good. Okay, I'm going to share my screen. You should see here Berkshire Class B.
Yep.
All right, excellent. Okay, so I'm going to take a little deeper dive in terms of the overall instruction here on this one. I find this one very interesting that a member requested. And I'm looking at a multiple time frame as we normally do, grid here. And from left to right, we have our monthly, our weekly, our daily, and our 2-hour. And first things first, I want to say is that cycle analysis gives you this amazing framework to be able to think off of as a technical analyst. And then as you transition yourself from that technical analyst into that trade planning strategist, you just have so much clear detail then to work with in terms of that technical evidence. And I thought the monthly chart was important here to pull up because the member asked for basically an intermediate time frame and short-term outlook. So I'm going to focus in on the short-term ultimately, but I wanted to start with the overall directional bias. And if we look at the multiple time frames here, so I'm starting on the left-hand side. This is our monthly cycle analysis, and this is the monthly chart. I have two momentum indicators on here. There's an exponential moving average 5 and the 13 up on the top, and then I have our reversal scout here on the bottom. You can see those are clearly positive, and you can see that we're into the peaking phase, late peaking phase of this cycle here in the monthly, and this cycle has been very positive. And unless there is a breakdown under this minor or this weekly cycle low support. So this is really important here, this weekly cycle low support, which comes around 437, 438, somewhere right around there. Then that would indicate that we could have seen that monthly peak coming in. So that's one to really keep an eye on, especially if we get that reversal scout to roll over in the weekly. But in terms of the overall directional bias, both the monthly and the weekly right now, you can tell by the configuration and the shape, these are and this is in a clear uptrend. Now I'm going to move over to the daily because we have some important information coming in on the daily chart and really just in this last 2-hour bar. So I'm going to focus in here now, and I'll come back to that intermediate in a second, but I'm going to expand these out a little bit here so we can see this a little clearer. So I'm looking at my daily chart, and I'm looking at my 2-hour chart. And what's important, this is an important teaching lesson that Slim has passed on to us that we think is really important, is how the shorter duration timeframes really impact that longer duration timeframes, and then vice versa. So the longer duration timeframes also impact the shorter duration, and I'll explain how that works right now. And interestingly enough, in this 2-hour bar, you can see that the slim ribbon has shifted negative. So this is our 2-hour chart here with the reversal scout. And we call it that reversal scout because it's going to be more sensitive. So it's out front looking at the price action. You can see that this turned actually earlier. This was, I think, on Monday. We rolled over here on the 2-hour, and now just on the last bar here, the slim ribbon, it's not confirmed negative. If we get another bar negative, that would confirm it. And what that then tells us is that there's a warning that is happening on the daily chart that there's a peak. So what I'm seeing is a peak warning driven by the information on the 2-hour momentum condition. In addition to that, I also overlaid here some smaller minor cycles. Now, these aren't perfect because they proportionately aren't in sync here. However, it just gives me a feel for the price action. And if I was looking at this low here that just occurred, today we just took out that low. So if this was a minor low, then this is another negative price action occurrence. So we had the combination of taking out this low from yesterday, that happened today, plus the negative combination between the slim ribbon and the reversal scout. And if we get another bar of the slim ribbon negative, that would secure that warning that there has been a peak occurring on, or has occurred, or is forming on that daily chart. And if that's the case, then what I'm looking for is a pullback into this support zone here. We have a 61.8 right around here, and I'm going to do a quick fib draw. And I'm going to use, the more granular you go in your time frames, it's easier then to see those swing high, swing low analysis play out. So I'm going to go off my 2-hour chart here because that's going to help me pinpoint inside of the daily chart. Let me just get my fib extension tool here. I see my swings pretty clearly. As long as this high holds here, this swing high, swing low analysis is valid. And what I would be looking for then is somewhere between, at a minimum, this 484. So we have a 50% right here. So in the middle of this short-term support zone, there's a 50% So that would be really the first area to watch. So I would look at this 486 to 484, watch for some support there, then move my arrow down. And I actually, these arrows here in terms of our tracks, our projection tracks, this is a new style that we're bringing in, are meant to indicate when we have projections that are in play in terms of the price action. And then when we have momentum to confirm, well, obviously we can't do this in real time. It's more for a teaching effect. So you think through the trade planning process, then we will change the colors on here. So for this one here, if that's the right one, I'm going to go, yeah. So I'm turning this one red because we have this combination of negative momentum here. And then I'm going to pull this one down, match it up with that. So if I'm doing my trade planning, I'm watching for a move into this area right around here, 420, 484 and a quarter. And then also, now I'm going to pull it. So there's a confluence. I'm always looking for a confluence when it comes to these levels. That helps me get a feel for where the buyers and the sellers are going to be active and where the reactions can happen. So you can see here that right around this 480 to 479, 478 and a half area, we have a confluence with a 78.6 extension along with the short-term 61.8, which is a retracement coming from the cycle low here, so our swing low here up to the peak, and then you can see here that we have that 61.8. So this is the zone here that I would consider to be in play in terms of meaningful support. What we don't want to see if you're a short-term bull is a close below that 61.8, because that would start to open up the door to more risk, and then also obviously a break and close below that 78.6. Those would be warnings that something is changing. So this is now how that short-term affects the longer term. So we saw here that the 2 hours affecting the decisions over on the daily. And then we have to wait and see how this low forms on the daily to say anything about the weekly. So to make any new projections on the weekly, given the current timing that's happening on the daily, we really have to let this play out. The only thing that would change that is if there was all of a sudden a significant move that took out the 78.6 the other way. That could tell us maybe there was an early low that formed. Then that would suggest that we have a new intermediate impulse wave that could be underway to get higher, or new daily impulse wave that could get higher, maybe get further up into this intermediate projection zone, fib extension zone confluence. You can see that here on the intermediate time frame that we got up into there, and that triggered this reaction. So moving on to the weekly here, a close below this 61.8, that would then suggest that we likely have that peak over here on the monthly chart. You can see the monthly very strong, but we're watching to see how this daily cycle plays out in combination with the weekly to tell us if we've reached that monthly peak. If we have, then we'll probably see a pullback at least to that long-term 23.6. We want to make sure that this low here holds, because if that can hold, then there's a high probability we get into this next confluence. So really can't say much about the weekly and the monthly outside of the fact that these are still very positive patterns. But in terms of what's in play, these are the levels in play. However, the price action at the moment, given the daily and the 2 hour, is saying that we have to be a little bit more patient before we might re-engage with the opportunities there on the long side, as we're now into the likely this declining corrective phase on the daily. So that's the look at Berkshire Hathaway. Hope that was helpful in terms of seeing the process. Hope our overall analysis that we shared with you today as part of this Q&A segment with the members requesting these symbols is helpful, so that you can see the process that we go to as analysts and then to translate that information for trade planning purposes. All right, so that's the conclusion of that segment. We appreciate the symbol requests that came in from our members. Now we're going to go into the next segment here, and that's going to be our review of oops, let me jump around here for a second. The next segment is going to be a review of our technical analysis services that askSlim offers, and specifically the level 2 special. I'm going to keep this very brief. I know everybody wants to get on to the next segments after this, but there are likely new members here, or there's going to be people that are first time coming to this YouTube segment that we have going on. So at askSlim, we have several premium membership levels that we offer here. I'm going to jump to those right now. We actually have 5 different premium membership levels. We have level 1, 2, 3, 4. Those are our core memberships. And what you can expect is that as you go further into the higher level of membership, the coverage in terms of markets and symbols and connection to the analyst team expands. So if you're looking for an introduction to our methodology and you're just looking for coverage of the indexes with static charts, very excellent information, comprehensive, but you're going to have reports and static charts. But if you want to get beyond that and get into more video analysis that happens on the markets, key markets, then you get into level 2, because we also have a trader library, and there's more expansive information in level 2. And level 3 is going to give you the opportunity to have some of our trade planning tools, such as our market condition monitor. And then we have a whole set, about 10 or 11 live stream channels where you can see our multiple time frame grids and analysis and indicators and live in action. And then level 4 is going to give you access to the charts. So those charts that you saw us working off of today, our level 4 members get to have directly, and they can import those charts to their own thinkorswim platform. So that's an overview of our core memberships. I mean, we are a professional technical analysis team. So if you are looking for technical analysis to help support, either to support your current, maybe your fundamental trader or investor, active investor, and you're looking to layer that in with some technical analysis, especially when markets get as choppy, and now with the downside moves that we're making, having that extra layer of insight through technical analysis can be extremely helpful. And then if you're a day trader, we do have a day trader service, especially if you're someone who looks for more intraday swings. This isn't a scalping system. This is looking for large intraday swings that last anywhere from about 15 minutes upwards to even an hour and a half. So we have a methodology that helps to pinpoint when you have an edge around those opportunities. And then finally, the level 2 special that we have going on right now, it is for 3 months. It is 35% off. So instead of $59 per month, it's only $38.25. And there is just a tremendous amount of information, comprehensive information, that you do receive if you are a level 2 member. What I wanted to show really quickly here on the level 2 dashboard, so you can see the various services we have. Number 1 is the Charts Hub. So if you are a fan of technical analysis and want to really get a sense of what are we seeing, we have a Charts Hub where you can look at our complete focus list of symbols. It is many of the most active and most liquid stocks, ETFs. And then as I keep scrolling down here, and I'll click on 1 or 2 of these, we also have several futures contracts and markets that we cover: gold, silver, copper, platinum, and then energies, oil, natural gas, currencies, and Forex. And then we have our TLT and bonds, and then foods, and then we also have some crypto in here, and then the VIX. So it is a extremely comprehensive set of symbols. And what you're going to get with that then is a look at our weekly and daily charts. And you can click on this to see both that weekly and daily. These are the static charts, images. These are reviewed on a daily basis, and then we upload these at the end of the evening. So you'll get those 2 charts. You can click to see the full size view. And just as we were discussing, you get a feel for our indicators on here, and then the cycle timing, which is just so powerful in terms of the additional insights it can give you. And then you can click on the cycle timing, and you can see the cycle low timing windows here, which is really important. So you know when those periods of risk are high volatility, when you transition from the outflow to the inflow, the declining bottoming phase to that new rising phase. So the Charts Hub is the go-to. It's the number 1 most viewed area of our membership site, and that comes with the level 2 membership. And then there's reports in here. So we have a daily snapshot. We have a Spider ETF review report. And then there's also, for intraday traders, we have a grid that you can look at that has on a 15-minute chart, we have key levels on here, and this is done pre-market. So this is shared with our members pre-market. This is a Zoom live feed and a webinar. So if there are questions regarding the information, you can ask. We have a lot of resources on everything that we do. But you can see here that this was a pretty good identification of support. It's a key intraday support zone. So I'm mapping out these levels pre-market so you can have a sense of where those reaction points can be. Then we have these price vacuums or voids where you can very high probability when you have the reversal scout, a bias momentum trend indicator in the same direction of we call this our acceleration zone, that when you get into this zone, there's a high probability of a fulfillment of that zone. So you can see that was about 14 points in the S&P. That's a really good opportunity in terms of a trade there if you're trading the futures or if you're mapping this as a proxy with the SPY. All right, so that's available. And then there's FutureSpeak. FutureSpeak is a collaboration between RV and Slim. RV does the charts, and then Slim does the charts, and then RV does obviously reviews the charts, but he's going to then present the analysis, and you're going to see and hear a review of energy futures, currency futures, precious metals, crypto, treasuries, stock indexes, grains and softs. So even if you don't trade or follow these markets, and if you want to learn about the technical aspect of these, or how to apply a methodology, once you start seeing the methodology in action, it's really applicable to just about any symbol. So don't think, oh, I don't really trade gold. Well, if you learn, first of all, opening up your horizons to say, even if you don't trade the future, you could trade GLD, gives you opportunities when other things aren't really setting up for you. So this is a fantastic service. There's just so much in level 2. If you have questions about level 2, you can reach out to me. We have a whole library of videos as well. Plus there's office hours that RV does where you can ask about specific symbols, and then he prepares a video review plus the charts. So again, for about $38 you're a month, it's a tremendous deal, and it is non-recurring. Okay, so that is that review. Now we're going to move on here to the next segment. And we're going to have RV give us a look at the stock market analysis. What a week it's been. Go ahead, RV, when you're ready.
All right. Yes, certainly quite a week. We've seen
That's right.
a very large sell-off in the market. But I think it is super important to understand that the way we have sold off is not just, hey, sell everything. It's it is far more selling the names that have held up the market for so long, right? Mega names, Meta, Google, whatever, all of these names just getting absolutely slaughtered on the downside. So let's go ahead and pop over. We'll share a screen and look at the S&P 500. But it's super important to always understand, in this case, they aren't selling everything. They're just selling those names that have held up the market for so many years, right? So it's really quite interesting. So let's go ahead and hop over now to the S&P 500 weekly, daily cycle analysis here. You should see that right now. So we'll go ahead and hop over to the weekly chart. Okay, so what you're seeing here after a series on the intermediate term of higher cycle highs, higher cycle lows, bullish cycles in each of these cycles is now a shift, right? You have seen the rising mode and then the sideways chop range where we could not get over that 6,100 area really. And now we have lost the 78.6 at 57.94, and then this trough right there at 56.96 has now been lost so far, just during this week. We'll have to see, where it closes, but overall, this is now raising the odds that we would see a series of lower highs and lower lows going out into that trough, and that trough is due 421 to right around 62. On the downside, we have a zone from 56.23 to 55.59, and there's a level just below that from 55.14 to right around 54.08. So now what I want to highlight here, if we shift over to the shorter time frames, is that there is a trough that is due shortly here, right? As you can see, we are selling off very sharply. We have formed a high here when we lost that key cycle low at 6,003. And then you can see the overall shift down on the downside. And then after that, every little uptick, right, was sold quite hard. Now, if we go ahead and shift our eyes over to the left side here, you will see if we look at the weekly time frame, the intermediate term time frame, our bias shifted on 228 on the intermediate term time frame at 2:45 p.m. Eastern. Where is that? 2:28 p.m. Eastern time is here, right at right around let's say, um, uh, 59, 30-ish, 59, 40-ish, somewhere around there. That's when the intermediate term shifted. What about the short term? The short term bias shifted on 226 at 2:45 p.m. Eastern time. 226. That's here, right? So you can see how this can be helpful to help you to see shifts in bias. That shift in bias happened way up here prior to this whole move down. Okay, so what we will be now looking at is there is a trough due shortly, correct? So we will be watching for possibly a little bit lower on the downside, right? As you can see, we have our zones here, right? As I just highlighted for you. We'll be watching for a shift in the short-term bias, right? And as it is right now, it's bearish. That has to turn bullish, at least slightly bullish to have that shift in bias. And then once we see that, there would be higher odds of a move back up. But as of right now, the overall short-term bias is firmly pointed to the downside. Now let's go ahead and hop over to 2-hour. This is where it gets interesting to me, right? Look at the overall mode here. A sell mode on the downside. Everything is bearish. We're seeing bearish signals come out here, and each of these work beautifully on the downside. And you will also see a move from the overbought region into the oversold region. That is not a good sign about the overall. If we hop over back to the weekly, the overall look here on the intermediate term has shifted, and we are getting everything that is saying that the highest odds right now would be for a series of lower highs and lower lows going out into that trough. So this is just, I think, overall quite clear. Now, on the short term, we said that there is a low that is due. What I would like to see is for us to clear that low, get everyone short, right? Everyone bearish, and then create a move like that back to the upside here. And then if that were to happen, that would be a really solid, I would say, move back to the upside here that would form. But again, we aren't there yet, but just keep that on the radar here in the S&P 500. If we pop over now to the NDX, certainly quite interesting as well. And obviously a move down here right to that same spot, right to the old low. We are trading right around it at right here. Let me just highlight that in red so you can see it. We're right at it, literally to the tick. What I want to see is, just like I said earlier, a move through that low, a pop back to the upside that then creates that final wave on the downside lower here in the S&P 5 in the NDX, sorry, just like what we said in the S&P, right? This is really the same overall picture, which is not anything all that shocking. Same thing here. There's a trough that is due shortly here. We will be watching for a shift in bias. You can see on the right here, the overall short-term trading bias here is bearish ever since 226 in the NDX right there. And on the intermediate term, you can see how easy this is to use on 228, same exact time frame. So we need to see a shift in the short-term bias here. If we pop this over to slightly bullish to raise the odds that we have formed that trough. We aren't there yet, right? And every little uptick so far has been sold. If we go ahead and pop over to the short term, you can see same thing as what we just highlighted. Bearish signals coming out here. Everything is bearish and really lining up. So we have to see that shift in that 2-hour bias to slightly bullish to say that there are increased odds of now higher prices. We aren't there yet right now in the NDX. And finally, let's pop over to the RUT. RUT is where it gets interesting to me, okay? There is a trough that is due right about now. You're seeing a 1, 2, 3 down on the downside. There is a zone here from, you can see, right, this is a a wider zone, right? But there's a zone that where we are trading into. What I want to see now is for just like what we just said, a shift in that short-term trading bias. If we scroll down a little bit on the short term, IWM very bearish as of 3/3 on the short term, and it was obviously it has been also on the intermediate bearish since 221. So overall, this has been quite negative for some time, as we all know. Pop over to the short term, 221. Where is that? Right after we saw that move right there. So it was right here is where it triggered bearish. And you can see how wonderful that was here on the downside and really saying what the overall bias is. Now, there's a trough that is due shortly here as well, correct? So we'll be watching to see if we can get a shift in that short-term bias to slightly bullish. If that can happen, that would say, okay, we can then be looking for a move up. But we are not there yet, okay? We haven't seen any real signs of a low yet, and we are going to be watching for a shift here to say that it is now in play to the upside. As of right now, the overall bias is still firm down, and that is our overall look here at these charts. Okay, Matt, go ahead and hand this off to you, sir.
Excellent. Great work there, Arvi. Really, really insightful. All right, so we'll move on to the next segment here. I'm just going to share my screen. And up on the screen, you should see coming soon, askSlim Advisory Group 2.0. So this is an exciting announcement because it was almost 7 years ago, we had our advisory groups 6-7 years ago, Advisory Group 1.0. As we went into a new phase an initial phase of development with askSlim and brought in an innovation team, a department to look at ways to essentially sort of download the logic from all of us analysts and really from Slim's methodology and figure out ways to then be able to surface it better for our members in terms of the trade planning process. And so we had an advisory group of members that came together and we went through that. Now we are going to go into another huge phase of innovation and development. And we're looking for a select number of premium members to join this. It's completely voluntary and it's going to be open to our levels 1 through 4. We definitely want to have a number of you from each one of our levels. What will happen is that probably next week or the following at the latest, you'll get an email with an invite to participate. Again, it's totally voluntary. It's at your own leisure, but we'll be having a number of webinars, live webinars, and it'll be small group webinars where you can share your feedback and look at our ideation sessions in terms of what we want to be able to build out, changes that we want to make. For example, I'll be doing one on the daily snapshot to talk about what could we adjust with each one of our services to make it more efficient and effective for you from a trade planning standpoint. And then as we look at new things that we're going to build, and there's going to be a number of large projects coming, we want you to be there because we're doing this for all of us as analysts and as traders to make the process more efficient and more effective. So if you do have an interest in becoming part of that advisory group, you can reach out to me at matt@askslim.com. And again, there'll be more information going out next week or the following. So very excited to have you be part of it. You can reach out to me also on Discord if that's easier. Okay, moving on. This is our final segment. We're going to look at option strategy selections and how we can leverage technical analysis for doing that. So we're going to have Katie, who is our lead option expert, show us that process. She's got a symbol that she's going to step us through in terms of the analysis. And then I'm going to look at a symbol and Katie's then going to show us how she makes decisions around the strategy selection. So go ahead, Katie, when you're ready.
All right, I will take the screen. All right, you should be able to see the weekly chart of Palantir.
That's it.
Yep. All right. So we have an average weekly cycle length of 34 bars, and those dominant cycles are divided into minor half cycles. We formed an intermediate low back in January and had this powerful move up towards this 100% fib extension level. Notice the return to positive momentum here when the reversal scout turned green, helping us to confirm that intermediate cycle low. This candlestick right here is a bearish engulfing that formed a few weeks ago, a gap down, and now finding some support near the 78.6% fib. Because of the depth of that decline, the probabilities favor Palantir being unable to retake this high. So I've created a resistance zone using that high and this recent low from last week. It runs from 107.52 on the top to 96.47 on the bottom. If I had a 78.6% fib in here, it would be right around 115. Momentum has just turned negative today. We do have a minor cycle trough due in that May timeframe. Let's switch over to the daily chart. Here we have an average daily cycle length of 23 bars, and I'm going to scroll backward so that you can see how consistent that cycle is over a number of years. Very consistent cycles. So in terms of this current cycle, the trough is basically unidentifiable. It's a swamped cycle. However, regardless of whether the low was here or back here or over here, Palantir has broken below the cycle low support and momentum has shifted negative. This is the reversal scout. It is negative, and the slim ribbon, which colors our candles red, green, or gray, depending on momentum conditions, that's also negative. We have a daily cycle timing window coming up between March 17th and March 25th. We're projecting down, this is the major 78.6% fib at 75.23. Coincidentally, this daily cycle timing window aligns quite well with the daily cycle timing windows that we're expecting in the indexes. Now, we're going to be looking at an options trade idea that utilizes the April monthly expiration cycle with 41 days to go, April 17th. That's out toward the end of this next daily cycle. So with the current daily cycle being a left-hand translation and negative configuration, meaning that the cycle peaked near the beginning of the cycle, way over on the left-hand side, and ending lower than where it began, we would expect Palantir to form a trough in here and then move up, but not be able to take out that high, stalling or failing in a resistance zone that we will create once we have a cycle low in place. Now we're going to go over to tastytrade. They are our preferred options trading platform. Matt, Arvi, are you able to see the askSlim site?
No, we can't. We see the charts right now.
Still looking at the chart. Okay, let me try to share again. So here should be the askSlim site. And if you're interested in tastytrade, they are, as I said, our preferred options trading platform. You can go to Partners tab here and hover over that, click on tastytrade. That will take you to a page where you can learn more about them. And if you do choose to open an account with them through our link here, that will help you with a special bonus. And it does also help us as well. So now let's go over to tastytrade. Okay, you should be able to see I have a Palantir loaded in here. And the IV rank is very high, 90.3. So we're going to be looking at a short premium strategy. Let's open up this April monthly expiration cycle. Our directional bias is overall bearish, but we are expecting a bounce once we get our daily cycle trough in the next couple of weeks. We don't know the extent of that bounce, but the 78.6% of the move so far is at about 115. So let's sell that 115 call. And our intermediate cycle low support is at 63.40. So let's go here to the 60 put, which is right at the 1 standard deviation mark that is shown on tastytrade with this light blue horizontal dotted line. So this strategy is a strangle. We do have it skewed just ever so slightly to the downside. You can see that by the just shy of 1 negative delta, so very slightly skewed. Our max profit is going to be the credit collected. In this case, it's 246. Our max loss, it's down to 0, of course, on the downside and infinite on the upside. This is an undefined risk trade. Our probability of profit is 81%. So this is what that is going to look like on the risk graph. What we want is for Palantir to stay in between our short strikes. A volatility contraction will help this trade, as would theta decay. Now, in my account, because the trade is undefined risk, it requires just over $2,000 in capital to place the trade. You can turn this into a defined risk iron condor by buying further out of the money wings to define your risk and cut your capital requirement. Let's do, for example, a $10 wide iron condor. Make sure I got that right. Yes, $10 wide iron condor. Obviously, this cuts your credit collected because you've used some of that credit to buy those wings. And your capital requirement gets cut too, as does your max loss. So I do want to note that if you go wider than $20 wide spread, you'll actually be using more capital than if you had just gone with the strangle. So that is something to keep in mind. I did publish this trade idea for our level 3 and 4 members yesterday, and I'm going to do a follow-up video on it next week and check in with how we're doing. All right, Matt, I will stop sharing and you can go over your symbol.
All right, great work, Katie. Appreciate that very much. Okay, so I'm going to take a look here. You should see IWM up on the screen. And Arvi did a review of the Russell. So this is the ETF that tracks the Russell IWM. And as Arvi had reviewed the Russell and therefore the IWM, the conditions are quite bearish at this time in terms of the momentum, in terms of the price patterns, cycle structures, as you go from weekly, daily, 2-hour, I even have my 15-minute on here because I'm going to be talking about a more near-term, short-term opportunity or analysis here. But if you look through, you can see that the weekly reversal scout is negative here. And then you move over to the daily. As Arvi reviewed, we have negative cycle structures. We have negative momentum. And then we move over into the 2-hour negative. However, what I'm seeing here is that a few different insights that make me consider that there's some key support that we have. So there's some fib extension zones, confluence zones that I identified, and you can see that IWM is in those, testing those right now. So this is something that when you get into time and price, so we're moving into a period where we're getting close to the cycle low timing windows on the daily for MWY, for IWM, for the Russell on the weekly. Then you have to look at and consider that, okay, we could get a reaction here on the upside. Now, the downside is what's intact. However, there's likely a bounce that is coming. Another factor in terms of suggesting that there's a bounce coming here soon is our option bias indicator, which is this on the panel on my daily chart here, which is available for our level 4 members. This helps to give you there's a volatility component in there. And right now it's really throwing off that the volatility is very high and that we are seeing an extreme move in IWM. And typically within a few days of this reading coming out, we look for just a near-term or short-term bounce to occur. So with all that said, what we want to construct, or the information I shared with Katie in terms of the technical evidence, is that there could be some range here. We could see some wide swings that are occurring right now. As of yesterday, we closed up here, And then today, if you're an intraday trader, you had a trade that started when the reversal scout went back negative, and we got a pretty decent move once that occurred. But right now, from an option strategy perspective, what I'm interested in hearing about is if I'm seeing that there's a good chance for some price action gets stuck in a range here, and then if we got up, or so that's one, is over the next week or two we could be stuck in a range, or as we get up into this minor resistance zone. So if I do a retracement draw from that peak over off of the daily here, I have my crosshairs, and I do that to where we are right now, into this 38.2 to 50 would be maximum. But what I'm really looking at is somewhere around that 208 to about that 213 and a quarter. If we got up into there, there would be an opportunity likely for a pullback for a short term, especially if this happens sooner rather than later, because we still have some time then for it to fall into the cyclo timing window. All right, Katie, that's sort of an overview of what I'm seeing here in the technicals. How would you look at that from a option selection strategy process?
All right, let me go and share Tasty Trade again, and we clear out this Palantir trade. Let's type in IWM. Okay, so we have an IV rank. I always look at this first, 53.1. That is quite high for an index. High implied volatility makes options prices more expensive. So we want to sell expensive options and then buy them back cheaper when volatility contracts. And that often correlates with a move up. So this is why we first look towards short premium strategies in high IV environments, because those strategies will benefit from a volatility contraction. Now, Matt has an outlook period of 1 to 3 weeks, so you could use this expiration cycle right here, March 28th, with 21 days to go. With nearer dated expiration cycles like this, sometimes we aren't able to collect enough credit, in which case I'd go out to the April monthly expiration cycle. But let's open up this cycle and see if we can collect enough credit on our strategies. So the move that we're looking for is similar to what I just described in Palantir. More downside potential into that daily cycle timing period and a move up in the rising phase of the next cycle, or even a bounce imminently, and then another move down into the cycle timing window. So Matt has identified some downside supports of 202 to 199.75. So let's just go right here and sell this 199 put. And he's also identified upside resistance from about 210 and a quarter to 212. So let's go and sell this 212 call. So again, this is a strangle. It's an undefined risk trade that uses quite a bit of capital to place, around $3,500 in my account. So if we want to define our risk and cut down the capital requirement, we can buy further out of the money options on each side, similar to what I did in Palantir, which will turn this strangle into an iron condor. I'll demonstrate a $5 wide iron condor. So I'll buy the 217 call and I'll buy the 194 put. So this, as you can see, cuts our capital requirement down by quite a bit. Max profit is the credit collected. Let's lock it in at 230. And the max loss is going to be 270, which is the difference between the width of the spread and the credit collected. So that's the same as our capital requirement. Notice that the max profit loss ratio is close to 1-to-1. So in some circles, this is called a chicken iron condor. And because of this ratio, it has a probability of profit right around 50%. It's slightly skewed again to the downside, just over 1 short delta. And daily theta is close to $8. Here is the risk graph. Let me just try to move this and zoom it in a little bit. There, looks better this way. So here is the risk graph. We want IWM to stay in between our short strikes, 199 and 212, or at least in between our break-even points. So break-even on the downside is going to be around 196.70 and upside break-even around 214.30. So that's one possibility. However, if you're worried about the magnitude of the bounce and you don't want to have any upside risk, you could employ a different short premium strategy that has no risk to the upside. It's a broken wing butterfly. Let's go back to the table view, and we're going to use Tasty Trade's strategy selector, and I am going to put in a put butterfly and just hit go, and that's going to throw in a classic butterfly. We're going to adjust the strikes. We want to put that short put at the 199 strike. So let's just shift this whole thing down. And here we have our short puts at the 199. Then break one of the wings by dragging this furthest out of the money put. I'm going to drag it down. Let's see, I'm going to scroll a bit. I'm going to drag it all the way down to the 188. Excuse me, 189. So that's going to be a $10 wide spread on that side. So this gives us a credit collected, let's lock it in, $1.57. That is not max profit. Max profit is $2.57, and that occurs if we peg our short strike at expiration. So that's very difficult to accomplish. So what we really just go for is the credit collected. Now, max loss is the difference between the width of this wide spread and the credit collected. So in this case, that is about 743. So that's also the capital requirement to place the trade, probability of profit right around 75%. This has just over 16 long deltas and a daily theta of about $6.20. Here's the risk graph. As you can see, no risk whatsoever to the upside. And here is that spike that shows max profit. Again, that will only occur if you peg this strike at expiration. Your downside break even is, let's see, 199, 198, 196 and a half-ish. So those are two possible strategies that you could employ for these technical conditions, and I'll turn it back over to you, Matt.
That was excellent, Katie. Appreciate all the insight on that. There's a lot of information to be able to share in terms of how you can utilize that platform and leverage the technical insights that we have. One final piece that I wanted to review, I'll just show my screen here, and it relates to some of the innovation that we've done and also a lot of what we showed today, and that is our MCM, our Market Conditions Monitor. And for those of you that might be new at askSlim or curious in terms of what we develop, the MCM here allows you to get access in real time to our two most dependable momentum indicators. That's our reversal scout and the slim ribbon. And we use those to help get a sense of bias. But beyond that, we also use them to help us get a sense of a trade setup condition by combining multiple time frames. So as a near-term trader, we have the 15-minute, 2-hour, the daily. As a short-term trader, we're using the 2-hour, daily, weekly. These are algorithms that are built in with logic that automatically then generate an output. And what you can do as a with the platform is we also have a notification app, a desktop notification app, where you can create alerts. And these are important because as I was listening to Katie describe, the option strategies, and as we think about the trade planning process, when something is setting up, we may have some patience for things to set up for certain conditions that you're looking for. So, for example, right now with the IWM being as bearish as it is, if we got a rally over the next few days and we got up into a resistance zone, and there might be then an opportunity to sell a call spread up, Katie, right up in the when we get into that resistance zone.
Mm-hmm. Yes,
and
I would wait for the signal for it to turn back down, and you could sell that pretty close to at the money then.
Perfect. And with that kind of planning and then having the MCM at your disposal, what you'd be able to do is set the notification, because this is going to shift. So right now, if you look at the intraday, the intradays have gone neutral because we're getting a little rally. So our 3-minute indicators are turning positive right now. And the 15-minute indicators, if we hold over the next 15, 20 minutes, you'll see those turn, and this is going to go even to slightly bullish or bullish even. But my point is then what you can do is you can go into the near term once these maybe shift to slightly bearish or even neutral, and then you'd be able to set an alert. So just as an example with Apple here, if I wanted to set an alert for this to get slightly bearish or bearish, I can do that. And then I will get a notification. It'll pop up on my desktop letting me know. And if I've already planned in advance, I can be prepared to then execute that trade. So you can use this as a cross check to get a sense of what is our system saying in terms of momentum. And then also you can use it very efficiently for execution. Also, if you have a position on and you didn't, you're doing other things at your desk and you can't, that's why we call it the monitor, the market monitor system, the MCM, is because it's going to be monitoring in real time over 10,000 data points when it comes to momentum, and it will alert you when there are changes. So if you had a position on in, let's say, SPY, and you were short it and you wanted to be notified when something changed, obviously it did. It let us know at 11:33 that something changed. And so that's also a way to help with your exit strategy planning or execution. You can use it that way. All right, I think we covered a lot of ground today. This was a very, very comprehensive show. We really appreciate everyone's attendance and the questions that everyone had shared with us here. And we look forward to having you again. In probably 3 weeks or a month, we'll do this show again with the askSlim analyst team, myself, Arvin, Katie. Again, we appreciate your participation and look forward to seeing you again. Have a great weekend and stay safe.
Bye, everybody.
Bye-bye.